Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, February 4th. Okay, this morning I'd like to take a look at 10-year Treasury yields, the TLT, and then look at oil and the reflation trade, and then dive into the indexes and FATMAAN names, where we saw prices wobble yesterday a little bit and have pretty much a poor close. So I want to see how that sets up for today and going forward. So let's get into it. Yesterday we saw yields pop on the 10-year. And here I've got a chart of the 10-year yields. And you can see from last August, we were down here at around 50 basis points on the 10-year, and we've been in a steady, nice technical channel here, and now we're at 113 basis points, 1.13%. And yesterday, you can see we were up 2.35%, and that's the thing on these 10-year yields with with yields being so low. You might hear a headline number, yields are up 2 basis points. And normally that's nothing. I mean, think about it. 2 basis points. But when you're operating in a regime where you're at 1.1, 2 basis points is 2%. So on a percentage terms, it's, it becomes a little bit more meaningful. So you can see here, we made a run in early January up here to this 1.14 basis percent yield. Try to get that right. And then we pulled back to the bottom of the channel, and we saw that in the reflationary trade where a lot of these names backed off, right? And so we've got to the bottom of the channel, and now we're on an upward path over really this past week. And we've seen a resurgence in that reflationary trade. We talked about it yesterday. We said, watch oil. And that's really one of the leading indicators for the reflation trade is a rising oil price. That's one of the largest components in the inflation calculation. And then you've got your base metals and all that kind of stuff, grains, etc., in the commodity complex. So yields are on the way up. And that, of course, means Treasury bonds are on the way down. Now, you guys know that on this break of 153, I got, back in January, I got the TLT February 151 puts, a bet on rising yields, falling bond prices, and we got down here to 149, which corresponds to, this kind of last area of value on this distribution of prices and trading action over the last year. And then we got a bounce. And I sat through that bounce up here to resistance. And now in the last week or so, it's fallen away. I still have the position. I just recently, went positive on it, I think in the last day or so. So I'm sitting here in the 151 puts for February that expire in 2.5 weeks. So if yields continue to rise, the reflation trade continues to pick up speed and steam with, the stimulus bill moving forward, the dollar, that's going to push yields higher and TLT lower. And what I've done here, you can see this big descending right triangle on price going back to August. This was the low in yields, the high in price, and we've been on a steady decline ever since. So the measured move on a symmetrical right triangle is the height of the triangle. So what I've done here is taken this distance, transposed it down here, which projects a measured move target down to 138. Now, what it doesn't tell you is when, right? We've got a large volume over price bar here at 142. So this could play out over the next year. It could be, slower than that. It could be faster than that. If inflation and if rates spike and inflation fears dramatically rise, then rates could rise quickly and these prices could fall quickly. So I like this trade right here. If I was getting, I'm going to stay short TLT. Now, I'll probably go out to March or April on the next, when I roll this position, whether I'm flat or marginally positive, I'm gonna roll that out and stay short as long as there's no technical reason not to. And if you got a pop back up into the high 151s, you might see this come back up towards 153. You could take it off and then reinitiate up here at resistance if you wanted to do that. But now that we've come down, we've back tested the breakdown, I think we fall away here, and it'll just remain to be seen how fast and how far it can go. We talked about oil yesterday. We said to watch that. We had identified this 41 level. If you had that alarmed and you jumped on it, then you had a nice trade yesterday. Here going forward, I think you can be long. I think you can be long XLE against 41. As we've discussed many times, the reason I really don't like XLE is basically 50% of it is ExxonMobil and Chevron. And, I think if you want to play a bullish oil trade, there are different ways to do it where you can get more juice. But certainly, this is fine. You've got a breakout of this downtrend line, and you've got a break above prior resistance. So that's definitely a breakout. Here's one vehicle I like, XOP. Yesterday was up about 5.5%. It's coming up to a critical level here at 70. I think if it takes out 70, if you weren't already in it, I would want to see 70 taken out, and then you can anchor along against 70 and then look for 77 on this push higher. You can see, you've got a series of bull flags just, grinding higher, and I don't see any reason, on a breakout here, why it couldn't find 77 on the next measured move higher. So that might be a nice trade for you. This is the MP Materials, and I'm showing this just as an example of a material stock that is setting up for a pop. I think this vehicle came public via SPAC, starting in here at 11 and now up in the low 30s. we've got this quick run up and now we've got a bull flag, right? So if this reflation trade continues to work, I like buying the breakout here out of this bull flag, get a bull cross here and PPO momentum. You've already had a turn higher in RSI. I like this setup. But you can look at other ones as well. Freeport McMoRan, FCX, Southern Copper. Those two are pretty much linked to copper. So you'll want to keep copper in the in your analysis of that. Watch copper. If you're going to play Freeport and Southern Copper, watch copper. But your base material stocks should do well in a reflation environment, and along with the reopening names. And I don't have it here, but if you wanted to do some study, look at the 7-day hospitalizations for COVID, the 7-day moving average. That is rolling over. And we may have already seen the peak. And I think the thing to look at is not the case count, but look at hospitalizations and deaths. And as long as that continues to roll over, I think the reflation trade will have tailwinds. Now, if this, variant comes in and throws the whole thing out of whack, then that's the one of the risks to the trade, is that vaccines bog down, something happens, these variants run wild that aren't addressed very well by the vaccines that are out there. That would be a risk. But watch the 7-day moving average of COVID hospitalizations and deaths. And as long as that rolls over, you're going to see more and more state and local governments open up, and hopefully we can get these schools open, and that will help things along as well. So let's jump into the indexes. SPY 2-hour. We had the burst off the 50-day moving average, which we tagged last week, blew out of the hole Monday and Tuesday, and Wednesday more or less back tested this rising channel that had been in place for a long time. And we had a fade into the close. So today, key off this 382, 381 area. I kind of look at that as a band. 382. Yesterday's close may be a line to shoot against this morning. If we have a little weakness into 381, that too is a support level. You can see these reactions here, 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 here. So 381 should be some solid support. So I wouldn't freak out right out of the gate if there's a little bit of weakness down to 381. But if we lose 381, I'd be a motivated seller there, because then I think we come down into the 379s to test that open gap. And you can see it here a little bit better on the exploded view. We've got this gap down here, 379.65, something like that. We've broken this uptrend line. So with the weak close yesterday. So let's watch that this morning. I would use 381 as your line in the sand for a bulls okay above, bears okay below type pivot. What has me more concerned is the Qs. and we'll get into it when we look at the FATMAAN names. We came down here, we undercut this channel, we rocketed back up, hit the top of the channel, and then backed off. We've got this open gap here. We've got this bearish divergence in place on both RSI, PPO. Notice we made a higher high, but at lower momentum. Top of the channel, weak close. I think this looks kind of vulnerable. Not ready to bail on it completely or go gonzo short, but after this quick run up and back off from the trend line, combined with what I'm seeing in the individual names, I think the cues are wobbling here. And let's look at the 30-minute. We closed back down at the bottom of this prior gap, and now I think this 326.50 is a great line to use as a pivot point. If we break below that, we're immediately going to come down $1 and test this big gap. And if we lose 325.5, then we could lose another $3 very easily on this gap fill. So be aware of that. We're bouncing a little bit here in the pre-market. It was like 6:15 when I started the tape, but most of that is due to Apple, and we'll get into that in a minute. IWM really didn't do much yesterday, but if reflation takes hold, IWM is going to again march to the forefront with a lot of value and cyclicals in there. Banks, rising interest rates are good for banks and financials. If you see a breakout above 215, I think you got to be a buyer there. That was the prior high. We'll see that on the chart here. Well, we had a spike high up here that gave up, but I think the real trading range is here between 212.50 and 215. If we get a breakout here at 215, I'd be a willing buyer there, and I'd mark that. I've got a nice trend line off of the recent lows. If we were to break back below 214, that would make it a little suspect, and that would give you a line to shoot against if you wanted to try and fade that for a move back to 212.50. So this 214 level can be a good level at the open, where if you wanted to get long and see if you can get a push up to 215, that would be fine. And then, if you weren't in and got the break above 215, like I said, I'd be a buyer there. I'd be a little bit concerned on prices below 214, 213.75, something like that. Moving on to the FATMAAN names. I think you've got to pretty much conclude as we look at these names that the price action has been pretty poor, pretty weak. Yesterday we talked about Facebook, the move down, late on the Fibonacci retrace. We came right back up to the 618 and rolled over. Now, it didn't completely fall apart, but we've got a pending rollover here on momentum. We've got a pending move on RSI back below 50. My line today is 266. If Facebook loses 266, I want to get short. If it holds, it's fine. If there's, some kind of resurgent strength in mega cap tech and 266 holds and you want to try a long, that's fine. That's objective. It is a support level. and you could see a bounce back up to 270. But there's no doubt in my mind that 266 is your pivot point for today. Apple. News came out after the bell last night that Apple and Kia Motors out of Korea have worked out some partnership for a self-driving car to be launched sometime in 2024, 2025. No other details, not confirmed by either Apple or Kia, but supposedly it's from good and reliable sources. So we'll take that for whatever it means. The after hours pop was right up to 138. Now they've backed off of that. They brought it back down to 135.5 and then bounced it a little bit from there. And so we're oscillating in between 138 and 135.5. Here's the key for today. Do the faders go right after this and break it below 135.5? If they do, I think it's a short. If for only the reason that you've got a gap down here to 134, so you got $1.50 just on a technical basis that they're going to go ahead and fill that gap and test it. So for me, 135.5 is your pivot. If they can hold that and drive it higher and you want to be long, that's fine. Certainly if they pop 138, you want to be a buyer there. Okay? If the bulls rush in and pop this 138, buy it, but I don't think they do. Just like Facebook, they faded earnings. Now we're in the midst of a fib bounce. I regard the car news as an anomaly, and if this really was a Fibonacci bounce and they take it all the way up here towards 138, I'd be surprised if the faders didn't come after this. If in fact they were going to fade it all along, that'll just be free money to the people that wanted to sell, and I'd be surprised if they didn't do that. But if they don't and they pop 138, buy it, because price talks and everything else walks. So those are your key levels on Apple. Tesla. We talked about this break into the prior range. Got a quick $80 move. Was capped right at the top of the range. I mean, that's a beautiful technical study. That shows you the level was right all along. I haven't changed these levels in forever, since way back here. They brought it back to 855. That's your pivot point. If they break it above 855, you can be long and look for 880. If they break below, I think you can count on a move back to 830 if things get soft. But you can see pretty clearly that they held the line here for, let's see, 1, 2, 3. They held the line here for 6 hours. So that's a real line there at 855. So I think that would be a great line to use as your pivot point today. Microsoft has been the strongest. You saw yesterday, if you've registered for my content, that I bought this breakout of 243. I bought the 245 calls for February 12th. I was disappointed. I thought I was on my way, here when this was running. But they brought it back into 243, which is fine. But they got to hold the line there today. If it gives up 243 and comes back in here, that makes it look like a failed breakout. I would probably be exiting my position there just to recalibrate. They are short dated options with only 10 days to expiration. When you got something like that, you can't afford to have it come back in here to 240 and then regroup. So I thought this consolidation here and then the breakout, it was going to go. And, so they got to hold the line here at 243. But of all the names, Microsoft, along with Tesla, definitely looked the best. Amazon, terrible price action. I mean, what are you going to say? Another situation where they knocked the cover off the ball. And whether you pin it on, well, Bezos is, stepping out of the limelight and going to step back, and this other guy, Jassy, is taking over. They pulled $100 out of it. They're up here at 34.20, and now they're down here at 3,300. So 3,300's got to hold. And if you are any kind of an active trader, if you see price come into 3,300 and form a little bit of a base, I think you can be a buyer there. But if it gives up 3,300, I think you're going to get immediate, the free 50 club. If you lose 3,300, it's coming back to 3,250 right away, I think, on, this power fade, and, bring it all the way back. And, this is bearish price action. I mean, if you can't hold up here on that report, I don't know what to tell you. And it's been the game plan on all these names after earnings. They have not been able to hold their gains. Google may have been the exception to that. Nice day yesterday, even though they dumped $50 out of it in the final hour. Big gap up, actually pushed higher to 2,100 before giving it up. Now, even if you weren't in it at all, you've got a great bracket trade set up. As long as it holds 2050 right here, you can be long and look for a move back up to 2,100 and possibly a breakout to go higher. But if you lost to 2050, you've got an objective short to at least move back down here to 2,000 and possibly all the way back if the Qs run into real trouble. So really nice bracket trade setup. If you don't know what a bracket trade is, go on the tradersprofitcompass.com, look under Trade School, look up bracket trades. You'll see a video of that and a write-up of that on the blog site and on YouTube. So that'll give you the game plan of how to trade these. Netflix, let's wrap up with this. Again, fade earnings, Fibonacci bounce, 50% halfback short, and that has worked. We talked about that yesterday. Was this going to be a breakout, or was that just a Fibonacci bounce and rollover, and the rollover played out? And one thing I want to point out for you aspiring technicians, notice how on this 50% level it aligns with a technical resistance level. We had this level here where price had come back in, found support, and bounced. So this support level would be a resistance level on the way back up. And look what happened. We came down. We came back up to test this level, failed. We came back up to test this level, failed. We came back up to test this level and failed yet again. So we had the 50% fib aligned with a well-defined level that had failed 3 times prior, that's an objective short. Now, if you were a bull, it's fine to wait and see if you got the breakout, but in this case, you never did. So, that's why you don't want to front run these trades, because until you got that confirmed breakout, you wouldn't want to get long here. So anyways, this looks like it's, headed back down into 535. We do have several open gaps here below. Not saying those will fill, but those are the next targets on a rollover. And you want to see 535 hold, at the worst 530 if you're a bull, and get a bounce off of this gap here below. So let's wrap up here. We're at the 30-minute mark. It's 6:40 as I'm wrapping up. Watch yields. Rising yields are bullish for the reflation trade. That's bullish commodity complex. That's bullish reopening trades. Watch the 7-day moving average of COVID hospitalizations and deaths. As long as that continues to roll over, the reflation reopening theme should continue. Oil has broken out and looks like it's heading higher. You can look at individual names in the EMP space. If you want to buy a basket, XOP, look for a breakout above 70 to get long with a tight stop below. Look for 77 on the upside. If you're a little bit more conservative and don't like, that beta, XLE long against 41 will work. That's basically a proxy for Chevron and Exxon Mobil. Looking at the indexes, I'm leery of mega cap tech. I'm leery of QQQs. They've got to get going. As a little factoid yesterday, of the 100 NASDAQ 100 stocks, 74 were red yesterday. Only 26 were green, right, on a flat day. And that was because of Google being up 7 to 9%. It held the whole thing together because of its weighting and the fact that Apple was flat. Most of mega cap tech was basically flat, and Google was up 7 to 9%, but everything else was down. And I didn't get into it. I had intended to, actually forgot about it. Semiconductors got whacked yesterday. Watch semis. Qualcomm was down 13% after hours. Cuervo, QRVO was down after hours on their report. Watch semis. If they're soft, they're a risk on, risk off asset. Be aware of what they are doing in relation to the Qs. And then on the reflation, IWM, if reflation takes off, rising interest rates, that should be bullish for IWM, banks, value trade, cyclicals, materials. Look for IWM to outperform in that environment. But remember, you can have a declining QQQ, declining SPY, but still have IWM ripping because the weighting is just so small within the whole context of the market. So watch out for a raging bull market under the hood and small cap value and cyclicals, while mega cap finds headwinds in that environment. That's what we saw in early January before the reflation trade cooled off. So let's watch that. If you like the content and you're new here, please subscribe to the channel and hit the alarm bell. That'll be great. You'll get notified of all new video content that I send out. And also, if you look over in the show notes, you can register for all my content and you'll find a link for the blog site. And if you do all that, you'll get an invite to our trading room. A lot of sharp guys, a lot of good guys. Got some good gals in there too. All aspiring traders, all pulling in the right direction. Great place to find some camaraderie and friendship. It's not all a bed of roses out there. We know that. When traders have a tough day, we lift them up. And if they have a good day, we celebrate together. And tons of good ideas in there. Even if you can't participate on a real-time basis, I encourage you with, quote, real jobs to join the room, flip through that at night, flip through the discussion over the weekend. You'll be able to in just a couple hours, scroll through days worth of commentary and ideas and sift out the ones that you like. And I like to think that would be a positive for you. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.